For a look at the recent price activity in gold, silver, and copper, I'd like to welcome to the show David Fischer, the founder and CEO of Landmark Capital. David, thanks for taking the time to be with us this morning. It's great to have you back on the show. David, the gold is like any other market. You've got your bulls, you've got your bears. The bears are calling for gold to get back down below or into that 900 level, while others in the gold industry and guests we've had here on the show are citing a major move up still to come this year. What are your thoughts on the gold market?
Well, I think there's a lot of dichotomy and of extremes. The bears saying down in the 900 and the bulls being 1,400, 1,600 this year, and some are even saying 2,000. I don't think we're going to touch either of those bookends. I'm more conservative than that. I think we're going to be more flat. When you look at the average mining cost of gold that was done by the World Gold Council 2 years ago, 1,050 was the bottom and 1,410 was the high. When you look at the top four miners, Gold, Newmont Mining, Kinross, and Barrick, their averages are 1,052 an ounce. So I think we're going to be in that level of where we're at right now, around $1,200. I don't think we're going to see major spikes or major depressions, and I think we're going to see just some stability. When you look at the August 15th report that came out that week of the COT, Commitment of Traders, I think that tells a bigger picture. We saw a reversal happening of a 9-year trend bend that happened where the commercials just stopped on the shorting of the market and they went to neutral. So I think that's a big trend, and that was the time when we saw the dollar peak at 96 and change, and gold bottomed out at 1190 or 1178. So now we're at the 1200 range. I think we're in a short trading range between 1180 and 1220. But when you look at the actual production side of this, I think that tells the big story. Looking at the macro, we mined a lot of gold and when the gold rush happened. And since the 1950s, about 2/3 of gold has been mined. Looking at the 70s, 80s, and 90s, every decade in the production side, they've discovered a 50 million ounce deposit, one of them at least, several 30 million, at least 10 of them, and 5 to 10 million ounces of deposits were countless. When you look at the last 15 years, we haven't had a 50 million ounce deposit mined. We haven't had any 30 million and only a handful of 15 million ounces. So the production side is down. It's moving down since 2015, about 15% a year. So the supply side has to match that. I think what's going to happen is we're going to see some changes, not necessarily this year, but in the future year, like next year, possibly some fundamental things that the debt structure, things like that, is going to add some upside to gold.
You know, David, it's great to hear you break down some of the fundamentals, that the innards of gold and what drives price, because we often look at it here just really in terms of inflationary pressures or in terms of reaction to the dollar. But one thing, you know, that you touched on there, and I wanted to get into a little bit more, was the gold and the dollar correlation, which for the most part has been a little bit out of whack this year, certainly recently. Can you talk to us a little bit about what's driving the price of gold right now? Or is it still tied to the dollar, I should say? You obviously cited many of the other fundamental contributions to the price of gold, but how much of a correlation are you seeing to the dollar right now?
Well, I think the dollar to gold plays back in. I think the connection is fairly strong. As you remember, I was on your program on May 7th, and the dollar was in the low 92s, and gold was 13 or 1240-ish, 1250-ish in those ranges. And I was calling for a high dollar, at least 93, and Kevin was a little bit shocked that I was saying that. And actually, you know, when you look at the dollar to gold correlation, I think there's a pretty strong correlation there, and an overlay of a chart if traders want to do that. And the high of the dollar was actually the low of gold, which was in August. So there's a fairly strong correlation. I think we're high on the dollar. I don't see we're going to see a big spike in the dollar from here. We've been trending down and gold's been trending up. So the correlation, I think, is back. Will it stay intact? That's the question. And if it does, I think you're going to see dollars evening out and gold being about the same. So I don't see big spikes. So this is accumulation time for gold if you're buying the physical market. If you're trading it, you got to be really precise on your entry and your exit points.
Yeah, certainly a lot of intraday movement as well there, David. I'm curious, we've been talking gold and dollar. Let's bring silver into the conversation. It's moved down more than gold. It's been the weak link, in many ways leading lower. Yep. Recently, we saw it down below that 14 level, certainly under pressure this year. Anything that could help lift silver right now off these lower levels? Any expectations for a bid to come back into play?
Well, I don't hold the theory of there's a shortage in silver like a lot of people in my industry say. The research I've done, I don't see that. There's ample amount of silver deposits out there, so the supply side is definitely not a problem. The demand is where it's at. Again, same thing that goes on with gold. It's been clobbered. 1453 is the bottom. Ironically, that was the same day, within a day, that gold hit its bottom. So there's a correlation of gold and silver being somewhat tied together all around the COT report in reference to the dollar. In fact, all the metals have done pretty much the same. They're following in the same trending pattern, Ben. I don't see a big spike in silver. I know that's not wishful thinking to my industry, but I'm going to be a realist, as I've always been. I think we're going to see higher prices in all metals, but I don't think we're going to see spikes in metals this year, as I said before on your program. So I think we're going to see some sideways movements in the trading range. Again, it's accumulation time for those who believe that silver is going to make a big run next year or the year after. This is the buying time for physicals. And if you're a trader, you got to really watch your entry and exit points. It's just like the same thing is happening in gold.
Dan, last question here. I'm sorry, David, last question here. Let's talk a little bit about tariffs. They've been implemented a few times since March. Does that have any impact on gold? And will there be more tariffs implemented, in your opinion?
Well, there's been a direct correlation, I think, with the negative news of tariffs. When you start to see what happened in March, you start to see a downward trend in the gold market because an upward trend in the dollar. There's, normally people flight towards metals because there's uncertainty, and tariffs have put uncertainty in the market. Certainly that's been the eminent. But the flight was not this time towards the metals, it was towards the dollar. That's why you saw yields rise. So looking forward, the last time we saw a tariff recently was $200 billion, and now we're feeling the brunt of that starting this week. China retaliated with $16 billion, and President Trump said if they do that, we're going to retaliate again with $247 billion. That would put tariffs over $500 billion. So this is a tariff war is what I see. I've been writing about it on my website, but there's definitely a tit for tat. It's not going to end soon. I think it's going to go on for a couple of years. Mao, the head of one of the biggest trading, or the Google in China, he says it's going to go on for 10 years. I don't know if I believe that, but I think it's not going to stop in the near future, and they're not even coming to the table. China has backed away from the negotiations. As of last week, 2 delegates were supposed to fly in and have meetings in Washington. That's come to a standstill, and they wrote a 360,000 character report saying how America is abusing them. Recently, one of their biggest representatives said just 2 days ago that America is sticking a knife in their back of their neck. So, I mean, the rhetoric is just flying left and right, and they're not approaching this thing and coming to any resolution. Tariffs should push gold down. Well, that's what's been happening. Yeah. I think we're coming to the end of that, though.